2025 is not 2017. And it's definitely not 2021. Bitcoin is no longer just a buzzword. It's becoming financial infrastructure. From individual investors to corporations and even national governments, Bitcoin is now a fixture on the global financial map. On today's episode of NextGen Digital Finance, we're exploring why investing in Bitcoin has become so important in 2025. We'll look at institutional adoption, government reserves, and what it all means for you. Quick disclaimer. This video is for educational and entertainment purposes only. I'm not a financial advisor, and this is not financial advice. Always do your own research or speak with a licensed professional before making investment decisions. Section 1. Bitcoin is now a strategic asset. Bitcoin used to be the Wild West of investing, but in 2025, it's a strategic asset. We're seeing this play out not just with tech-savvy millennials, but with Fortune 500 companies. Companies like MicroStrategy and Metaplanet are doubling down on this trend, converting large portions of their treasuries into Bitcoin. Why? Because Bitcoin offers something fiat can't: a verifiable, scarce, and durable digital asset. This year alone, companies have raised over $43 billion to gain exposure to Bitcoin, a clear signal that the corporate world is taking this seriously. Section 2, the new role of government. In a historical shift, the US government officially established a strategic Bitcoin reserve in March 2025. This wasn't a secret, it was a deliberate move to include nearly 200,000 BTC as a component of the nation's financial defense system. Why does this matter? It's a powerful signal that nations are beginning to view Bitcoin as digital gold, a hedge against inflation, currency wars, and global instability. It shows that the world's most powerful institutions are now playing the long game alongside individual investors. Section 3. The rise of spot ETFs. Institutional investors aren't just watching from the sidelines either. With the approval of several Bitcoin spot ETFs in early 2025, major firms like BlackRock, Fidelity, and Vanguard have made Bitcoin accessible to millions through traditional investment platforms. These ETFs are now seeing more capital inflows than even some gold funds, demonstrating a clear shift in investor preference. For private investors and family offices, the trend is clear. Many are now allocating 2 to 5% of their portfolios to crypto, with Bitcoin as the foundational asset. Section 4. Halving, Scarcity, and Predictions. At its core, Bitcoin's code is its most powerful feature. With a fixed supply of just 21 million coins and a recent halving event in April, the rate of new Bitcoin entering the market has been cut in half. Historically, this has triggered major bull runs. This time, analyst predictions are more significant than ever. JP Morgan suggests 180,000 by Q4. ARK Invest has put their target at $250,000. Are these predictions guaranteed? Of course not. But the underlying fundamentals have never been stronger. Section 5. The maturation of Bitcoin infrastructure. In 2025, the conversation has moved past hype and is focused on infrastructure. The Lightning Network is making Bitcoin payments nearly instant and incredibly cheap. Institutional-grade brokers like FalconX and Hidden Road are providing secure trading and custody solutions. And new technologies built on Bitcoin are opening up entirely new use cases. Bitcoin is becoming faster, easier to access, and more deeply integrated into the global financial system than ever before. Section 6. Risks still exist, but the game has changed. Of course, no investment is without risk, and Bitcoin is still volatile. It can swing 10 to 20% in a week, and regulatory clarity, while improving, is still a work in progress. Critics, like Nobel laureate Eugene Fama, continue to argue that Bitcoin has no intrinsic value. But here's a difference in 2025. Bitcoin isn't just speculation anymore. It's a global experiment in decentralized, borderless money that is gaining undeniable credibility. Thoughtful. With major institutions now allocating billions, the game is fundamentally changed. Section 7. How to approach Bitcoin today. So, with all this momentum and a clear understanding of the risks, How should the everyday investor approach Bitcoin today? 7 advisors suggest allocating 1 to 5% of your portfolio, enough to benefit from its growth without overexposing your finances. Use secure platforms. Choose trusted exchanges for buying and use cold storage for long-term holding. Think long-term. Don't trade every dip. Hold with conviction, just as the institutions entering the space are doing. Stay informed. Bitcoin is rapidly evolving, and so should your knowledge. Bitcoin in 2025 is no longer a fringe idea. It's a financial revolution in motion, and its permanence is becoming increasingly clear. If you found value in today's episode, give it a like, subscribe to NextGen Digital Finance, and turn on notifications so you never miss a future breakdown. What part of Bitcoin's evolution in 2025 excites you the most? Let us know in the comments below.